Hey, I'm Granger Hughes with Hughes Retirement Group. Was going to talk to you a few minutes about what's going to happen when you're getting ready to retire. So, most of you probably have a 401k or some type of retirement plan. Hopefully, you've got Social Security that's going to be getting ready to be activated shortly. One of the things that we do at our firm, and we help local people who have worked at local companies for years, is help generate income streams that are guaranteed, so you don't have to worry about outliving your money. You know, you've been working your entire life, receiving a paycheck every week, every month, whatever your occasion is. And the idea there would be to continue that so you're not having to leave yourself to the whims of picking at that pile of money that you've accumulated throughout your working years. The next step that we try to take is looking at the portion that's still going to maintain some market exposure. Are there things that we can do there to hedge against risk, but still participate in some of the upside of the market should the markets continue to rise? But also looking at your current risk-reward relationship. A lot of times we find with people who have 401ks, maybe they've taken on a little bit more risk than they had thought they were, and we test that for them and show them kind of where that's at. And then if we need to make adjustments, we can do so from that point. Another thing that we would look at is taxation. What is the best way to distribute from that pile of money, so to speak, or maximize Social Security without paying excess tax? Making sure that our buckets of money from a taxable bucket, which is money that's in our bank account or money that's in these individual brokerage accounts, or our 401ks, which are tax deferred money, or maybe we have a Roth 401k that's tax free. So finding the right relationship between those three buckets of money to maximize that take home pay. Another thing we would look at would be long-term care planning. So not everybody wants a long-term care policy. That is an option for people, but there's other ways to activate long-term care. And so one of the things that we use at our firm quite a bit is something that's going to generate a lifetime pension. And let's just say that pension is going to give you, for example, $30,000 of income a year. Well, in the event that you or your spouse needed to activate some type of long-term care, meaning you couldn't perform 2 of the 6 activities of daily living, you couldn't feed yourself, you couldn't bathe yourself, that trigger in the policy will go ahead and activate, and you will be able to double that money. So if you were getting $30,000, they would give you $60,000 for up to 5 years. So those are just ways to kind of tackle, long-term care and help be able to kind of supplement that if you don't have a long-term care policy. Estate planning, that's another step we would take. We would look are there ways that we need to, once again, provide for ourselves now where we can accomplish a death benefit, accomplish some long-term care, some tax-free income. But then if we don't utilize any of that, then that benefit would go to the children or beneficiaries tax-free. So those are kind of some steps that we would take with our clients, and we do take with our clients on a daily basis. So if you have any questions or want to reach out, give us a call, 423-664-4203, because in most cases, you're going to be either with Fidelity or Schwab, somebody like that, and it's a pretty painless process. We can go ahead and keep that with Fidelity or keep it with Schwab and just change the allocation. So it's a pretty painless process. Feel free to check out our website as well, hughesretirementgroup.com. And then once again, that telephone number is 423-664-4203.